Welcome, everybody. This is another eye opener. This is one of our daily chats that we do with some of the top traders we've been working with. And we are really excited to have Blane back here. Blane, awesome to have you with us. I know last week uh, we talked about some really cool stuff. And one of the things that came up in the chats that we were having was this kind of ceiling at about 5,700 for the S&P.
Right.
And of course, looking at today, man, bam, it just broke through that. Definitely came out of the gate like a wild horse, but starting to see everybody kind of, sober up a little bit, so to speak. So interested to have you back here. I'd love to hear what you think is going to happen next now that we're through that resistance.
Right. Yeah, absolutely. So thanks for having me back, John. Excited to be back here live with you on an eye opener. And like you said, not too much happening out there in the markets today. Pretty just normal, boring day, right? But no, just kidding. Obviously there was some big news that broke over the weekend, kind of later into yesterday, after, there was obviously a very significant meeting being held between U.S. and Chinese officials regarding trade policy. And heading into the weekend, I mean, you could tell by the markets, just trading and just general sentiment around the market. The market and traders were not expecting really any type of a deal to come out of this meeting, more or less just hoping for progress and just to see things de-escalate. And what we actually came out with was certainly not some finalized deal. There's still some wood to chop regarding trade policy with China, but uh, for the market's purposes, about as good of a result as we possibly could have hoped for. There was a significant rollback from both sides. There was a bilateral rollback in the reciprocal tariffs, as they have called them. But
Mhm.
so you've seen a significant change happen. So where we were at on Friday versus where we are today, the playing field has changed certainly. There's been something new introduced. You had a substantial worry and uncertainty removed, at least temporarily. It's on pause for 90 days, and there's a lot of hope that something further can get done within those 90 days. So, with that, as you were mentioning, John, I'll go ahead and pull up a chart here just while I'm talking about this. Let me see if
Amazing.
you can go ahead and enable my screen sharing there.
Yeah, if I would remember this stuff, I'd be doing great, man. I tell you, sometimes there's so many
No
chainsaws
sweat.
I'm juggling.
As we said, yeah, it's we call them eye openers for a reason. Sitting
Yeah,
here trying
right.
to knock the rust off, right?
That's it. A little more
All right.
caffeine here.
Exactly. Yeah, I'm on the same plan. So here we go. So got my chart pulled up here, and as you're saying, John, I kind of was alluding to last week that there seemed to be fairly clear resistance starting to form on the charts, at least at the S&P index level of around 5,700, and on top of that, you had that 200-day moving average kind of sitting right above there. So some very significant resistance levels that were starting to come into play. The 5,700 was dating back to just kind of a trading range where stocks found resistance back in March, and then right before the Liberation Day tariff announcement. So that was a very significant range, and I had also been alluding to this in my Market Periscope newsletter that we had this these significant resistance levels starting to form on the chart, and I anticipated momentum to start slowing down around that. You can see last week that is what happened. We went up, we traded up to right around 5,700. Momentum slowed, kind of the market bounced its head off of that level and kind of just got stuck right below that. And assuming that investors were demanding for stocks to move higher, they had to get another carrot. They had to have some additional catalyst to move higher and break through that trading range, and we didn't get that until today. So I was saying that over the past couple of weeks that absent some very significant news on the trade policy front, we were likely going to see stocks not be able to break through that level. But that's exactly what we got today. We got that carrot delivered to investors, that they have been, so eagerly hoping for over the last couple of weeks and months, really, to see some just de-escalation and progress on finally getting some of these very significant tariffs on major trading partners of ours resolved. So you can see today, massive gap up, really market wide on the indexes. All three of the major indexes gapped up significantly higher. We're looking at the S&P 500 right here. You can see stocks are currently hanging in right around 5,800, which is through both of those resistance levels I had identified last week. So you can see we finally were able to power through that roughly 5,700 level, and we actually jumped up above the 200-day moving average today. So to build on what I was talking about last week, John, is that, if and when we were able to break through these levels, if we were to break through them intraday trading, anytime that we're able to close above them, that should be interpreted as a very bullish signal for stocks. Those are very significant levels of resistance to break through. So being able to trade above those, close above them, that's a great sign for stocks. Now, looking forward, should we be able to stack a couple days in a row, get some follow through from stocks, and be able to consecutively close above that level and stay above that trading range? Well, that's great for two reasons. I mean, stocks are rising, so that just the one-day action today wasn't a fluke. That means there's some follow through, and investors are continuing to support stocks at those levels. But two, since those were very significant resistance levels that we had to overcome previously, now that we've broken through them, you can see now over the past couple months, where stocks topped out on this, just bounce that we saw in the market, that rose all the way up to just below 5,800, and now we're trading above that level now. So now we have a handful, just technically speaking, looking at this chart, we have really three very significant resistance levels that were or previous resistance levels that are now going to turn into support levels for the market from a technical perspective. So you can see the one we were talking about at 5,700. We have our 200-day moving average now that we're trading above, and this high that we experienced on this bounce during the decline a couple months ago right here, which was, again, just a bit above 5,750. It's, it's probably about 5,775 roughly, just call it that. So we have three very significant levels of previous resistance that are now going to turn into support. And so you're going to hopefully see stocks be able to remain above that level moving forward, and likely hoping for a further catalyst on the trade front, whether that's another big trade deal with another partner. We're pretty much through earnings season at this point, so I wouldn't expect too much on the earnings front, at least for a couple months until we get back into earnings. So, whether it could be something happening in macroeconomic data or just trade deals, but the market's probably going to be looking for a catalyst moving forward. We are up about 3% today. We could see some follow through, but this is a massive jump. Obviously, I believe, John, on Friday at the Friday's close levels, we were about 17% off of this intraday market low back in April. So I haven't done the math for yet, as of today, but this is a significant move in really just about a month's time that we've experienced. So we're gonna have to see some further progress. I would expect in the weeks to come to continue moving higher from here, but obviously some very great signs in the market today.
Yeah, just pretty wild to see this kind of snap, and to your point, last week when we were talking, you kind of laid this out as a viable possibility. Let me stop for a second, just kind of remind everybody, hey, this is interactive here, folks. If you're in there and you got a question about what we're talking about, go ahead and drop it in the chat. I'm pretty sure I got that turned on correctly, so go ahead in there. It's great to see everybody in there, see some familiar names in there. Again, love having you guys join us for these chats. But all right, Blane, I'm going to play the devil's advocate here. All right. One day piercing through resistance does not a trend make. I look at this and say, can we sustain it? And, watching the headlines this morning, I'm already seeing that, while it was initially announced as they reach an agreement, now there's a lot of details to flesh out on this thing. To me, it feels just a slight bit vulnerable. I mentioned this morning in a Telegram post that I put up, be sure to lock in that profit early today because so many things can change. And I still kind of feel that way. Not dismissing this breakthrough, but looking with that in mind, the vulnerability of this market has just been relatively fragile, I think, all the way along. You can see these great moves, to your point, too, this big move up after the bottom. Unbelievable. Great. My gut is telling me it's fragile. How do you manage that when you're starting to position some of the trades you're looking at?
Yeah, 100%. And I couldn't agree with you more. There's certainly a lot of things still in flux. Obviously working with China and starting to de-escalate and see some progress there is great. But, there's probably about 95 other battlefronts that we have to deal with as well on the trade front. It's a pretty wide ranging thing that we have gotten into here. So that there's a lot of wood to chop. Is kind of what you're alluding to regarding trade policy. And so certainly, as you said, one day does not a trend make. While this is great to see, we do need to see some follow through. So that, kind of getting back to what I said earlier, we need to see stocks remain above these prior resistance levels. See these, are going to now swap over to support levels. So we need to see these new support levels hold. We need to see some further progress to give stocks some fuel to keep moving higher. But with that, still taking somewhat of a cautious approach. Obviously, again, just speaking from a technical perspective, even though we've gone ahead and seen some great bullish moves over the past couple of weeks, we've broken through some very significant resistance levels. If you're just looking at just the past roughly 2.5, 3 weeks of trading, there's only 3 days, there's only three red bars in this stretch. I mean, if you're looking back to, I don't know, this is roughly April 22nd, I guess, or possibly the following Monday, but you can see from this date through present, there's only 3 red bars. So that's about 3 weeks worth of trading with only 3 days where the index actually fell. So that's a pretty significantly long streak that we're on right now of up days, which is certainly great. I think we'll all take that, but realize that that's a very long streak without some significant pullback along the way. So eventually, profit taking is going to come back in. People are going to be looking to de-risk a little bit, take some risk off the table. So you should fully expect that. So you should, even though this is a very great bullish sign we're seeing in the markets today, certainly probably would not be pushing all my chips in the middle of the table here, so to speak. Wouldn't be
Right.
going all in today. Things are a little extended, technically speaking. You can see that somewhat illustrated here on this chart. I have some Keltner channels overlaid. You can see the indexes certainly spent most of today above that upper Keltner channel band. You look at other things like RSI, it's certainly looking a little bit extended from an index level today. That's certainly not meaning all stocks are
Right.
extended, but just at the index level broadly, things are a little extended. So, still, being patient, looking to still, pick your spots wisely, still sticking to your process, still sticking to your rules. You can still find different opportunities out there, single stock wise, certainly, that are, maybe not so extended, but still have really strong looking technicals and great looking trends. So that's kind of what I wanted to hop in next, John, is to kind of actually see something pretty exciting. I know you're going to be sitting down a little bit later to actually unveil this. But
Yeah.
uh,
I had to put on my grown-up clothes today because I have to look like a professional. It's a little against my grain. I'm the most unprofessional professional you'll ever meet, but I'm really stoked about it. I don't want to steal the thunder, so you go ahead and you kind of talk about the big event coming up today.
Yeah, absolutely. I'll be glad to. So, what I'm kind of alluding to, everyone, is that in just a short bit from now, John is actually going to be sitting down live with Chuck to unveil a brand new product that we've been able to create and we've been working on for a number of months. And it's kind of a trading suite of tools. It's going to be partially an indicator, but also going to include a scanner. And what this tool is going to be doing, we're going to call this our Phoenix trading tools. And what they're able to do is that regardless of market conditions, they're able to spot some of the absolute strongest stocks and opportunities in the markets out there. So it's scanning across thousands of stocks, but it's going to identify for you, regardless of what the market's doing, the stocks that look the absolute best and have the best trends, best strength across the market. And even when we had this significant decline throughout March and April, the stock charts that it was pulling back. I mean, if you were only looking at the stock charts that Phoenix was identifying during that period of time, and ignoring, just not looking what the rest of the market was doing, you would have had no idea that the market had experienced a peak to trough decline of 20%. I mean, you would have no idea because the stock or this tool was finding such strong setup. So with all that said, John's going to be sitting down to unveil that later. It's the first time we've ever talked about this publicly here today. So this is a really exciting day here for all of us. But I wanted to just show you all just one of the opportunities that it spotted today. So I logged on just a little bit before our call. And one of the opportunities it spotted was for ABT. There was, this is just the indicator right here. So you can see We have a green up arrow, which is indicating the buy signal here on our Phoenix indicator. So that's signaling there was a buy signal generated today for Abbott. Or sorry, hold on one second right here. This is actually looking at the wrong chart. And so here we go. So it's right here. So it was on here earlier. So I probably just fell off. Let me see real quick.
And so the cool thing about this is that, like you said, it works in both the downside. It's in that drop that we saw, it was still finding bullish winners. But then
Right.
when the market's skyrocketing, this is what makes it great, is like, all right, you got a whole list of stocks to choose from, and it looks like everything's just going up, and you figure, how can you lose? Just grab one. The difference is finding the one with the biggest potential payout. That's what this
Mhm.
thing is amazing for. It's just really incredible. I've kind of gotten a glimpse at it. I got a little peek behind the curtain, and man, I'm super stoked. So here, let's get back to that chart.
Absolutely. So, like I was saying, right before I logged on, there it had a buy signal generated for Abbott. It's not currently showing shit. It may be just right on the margin of meeting all the criteria, but regardless, it still looks like a very good setup that Phoenix had identified. This was really just 20 minutes ago, so this was a great looking buy signal here. So we did, just like you can see some previous buy signals in the past couple days. We did have a green arrow generated down here. And so with that, that's identifying that Abbott's one of the stronger looking stocks. It's not currently, even though the index level, things are looking fairly extended after today's, massive gap up that we've seen. But with Abbott, it's actually not, it's not signaling that. It's showing that this is still, for this single stock, it's still offering a really attractive entry point, technically speaking, at these levels. So with that, I would likely look to go ahead and find an option-based trade to go ahead and trade along this signal. So what I did is I went into just my brokerage here. You can see I pulled up Abbott, and I went out to about the June 20th expiration. The May options are expiring this Friday, so they're a little close. So I went out and looked at the next monthly expiration date, which is going to be June 20th. And just looking down the options chain here, you can see we have our 5 point increments here. I zeroed in on this one right here, this 120 strike call, because that one's a little bit far enough in the money. It's fully meeting Chuck's power trend system of following the 1% rule, picking these options. So I selected the 120 and just want to see what the returns look like for this trade here. So I went and plugged it into our call option purchase calculator, and you can see these were the current levels as of again just a few minutes ago. And you can see it meets the 1% rule right here. It has a really solid profit potential. You can see that if the stock were to continue trading higher, if it were to be up 5% at expiration, near a 40% return, if it were to be up about 7.5%, it's coming in just about a 62% return. And then if we saw a massive jump higher, then we would see, about an 85% return if the stock were to increase about 10%. So, have a really nice risk reward on this trade here. It has some really nice upside also while still being in the money and meeting that 1% rule. So not requiring a massive move higher in order for this option to profit. So that'd just be one way I'd be looking to take advantage of this great buy signal that was generated today by the Phoenix indicator. And again, remember, folks, this is what the S&P chart has looked like, over the past couple months. Just this huge slide in stocks. Again, we experienced a peak to trough decline of about 20%, and of course, we've had a pretty significant bounce back since then. But I mean, look at the chart for Abbott. It sold off a little bit, but substantially less than the market. It found support much faster and started trading higher much faster as well. And at current levels today, it's actually offering a really nice entry point. So, that was a solid looking buy signal that it found today.
Yeah, it's interesting. You showed a couple buy signals pop up on the Phoenix indicator, and then, everything's kind of churning and burning today. A lot of times, the big winners are the laggards who haven't quite caught up to the move, and have this broad move. And I would never even looked at AMD, or I'm sorry, Abbott rather. But now that you pointed out, I'm like, oh, that's great. You didn't miss the whole game, and I think Phoenix is picking up on that. And that's just
Absolutely.
one of the really great aspects of that indicator. Again, just really amazing. I dropped a link in the chat for everybody who's with us today. Make sure you jump on. It's going to be in just a couple hours, and not even yeah. So a little over an hour. We're going to be starting that up and doing the big unveiling. And it's me and Chuck. And Chuck, obviously unparalleled in his ability to kind of recognize these great tools for trading, and then also to be able to kind of walk through them and explain them to people. So looking forward to having everybody there. Make sure you jump in and join us. Again, and the key thing here is this is limited. They're only opening up 100 VIP spots on this. And I know that the response has been just like a tidal wave, people coming in for this. So we want to make sure that if you're interested, you can get in there and get access to this. Again, the link's in the chat there. And if you're looking at this when we send out the replay, we'll make sure that there's links with the information in there, and hopefully there'll still be some spots available. Can't guarantee anything because it is limited. So hopefully there'll be something there.
Absolutely. Yeah, no, it's really exciting. And I don't want to say too much about the indicator today because I know you and Chuck are going to be kind of spilling the beans, so to speak, later on and telling exactly how this thing works and go in a little bit more detail. So I wanted to save all that excitement for you guys later, but just want to give just a quick taste of just exactly what the Phoenix indicator and scanner are and what you can expect to see later should you go ahead and sign up to attend. I think it's certainly going to be a presentation you're not going to want to miss. This is again the charts that this tool has been able to identify and the crazy market volatility over the past couple of months has been very impressive, as well as some of the results it's been able to identify and been able to produce with the trades that it's identified rather. So, certainly, again, I think you really enjoy if you join later to check out the presentation on Phoenix, and certainly hope you enjoy it. So, with that, John,
Yeah.
that's about all I had for today. So, unless there's anything else you had to touch on.
No, that's a lot. We got a lot going on today. I mean, with the market being wild and with this huge unveiling today, I'm super stoked. So, yeah, I'm with you. We're gonna jump. We're gonna let everybody else kind of get back to looking at their trades and get all signed up so they can be in the Phoenix unveiling there. But Blaine, thanks so much for taking the time. I know you are swamped. And we've been doing this on Mondays and Wednesdays, but I think you got something else going on Wednesday. So we probably won't see you on Wednesday. But we'll try to get you back after that.
Yep, absolutely. Yeah, I have my hands are going to be a little full on Wednesday. I have a different appointment scheduled for that day. Expecting a new member of the family that day. So exciting things here in the Markham household. But yeah, we'll be a little busy on Wednesday, so may have to take a rain check on that one. But I'll be back here as soon as possible for the next eye opener, and looking forward to it.
Yeah, absolutely. We'll get you back. Be sure to check out the schedule. If you guys check in the emails that we're sending out, there's a schedule on our TradeWinds daily site under eye openers that will help you find the next one to sign up for. Carlo, just sending a big congrats to you, Blaine. So great to have everybody in the room. Got to keep it up with this. And this is the great part about these daily sessions. You can kind of follow up on what we did before. So make sure you sign up. Blaine, gonna let you go. I'm talking too much. I'm gonna jump, and you take care of yourself, and we will talk to you again soon.
Perfect. Thank you so much, John. Appreciate it. And thank you, Carlo, for the kind words. I really appreciate it. Hope you guys have a great day, great week, and best of luck trading. See you back here soon.